In today's video, I'm going to break down exactly what is happening in the Fraser Valley real estate market as well as the Canadian real estate market. I'm going to talk to you about sales, new listings, interest rates, and where I think the remainder of the year is headed for 2023. Before I do that, I would just ask if you guys are enjoying my content, please hit that subscribe button and the like button to help me get my information out to more people like you. If you want to book a call with me, you can do so by clicking the Calendly link in the description below, where you'll be able to book a 30-minute call with me where we can talk about all things real estate. Touching on rates here, it is only until recently where economists and financial professionals have started to indicate that interest rates could be at the peak and that we shouldn't expect any further rate increases from the Bank of Canada. They project rates are going to hold until about the summertime of 2024, and then we should start to see a dip in the overnight lending rate, going down to the 3.5% mark. This chart here is just saying that in September of this past year, it was up to 70% of people thought that rates were going to change and continue to increase. And then when they asked people in November of 2023, the number of people that thought rates were going to continue to increase from 5% to 5.25% dropped substantially. So we actually saw fixed rates decrease here. So variable have held because the Bank of Canada didn't make a rate increase at their last meeting at the end of October. However, fixed rates did fall. I think that's the start of what we're going to expect to see over the next few years. And again, that goes back to the fact that when people renew, they're going to have rates be lower than what they are right now, or they're going to be a lot of people in financial stress. People that are going to have to renew their mortgages when they bought in the peak of the market at very low interest rates. Most people lock into a 5-year fixed when they do choose a fixed rate. We are going to see people in 2025 and 2026 have to renew their mortgages, and they're going to be in for a shock. I agree with the chart that I showed you guys that they should be around the 3.5% to 4% range. But looking historically back at data, even at where we are today, sitting at 5% overnight lending rate, that is still low relative to what we've seen in history. So we can see here sales were at the peak in June and they've been on a steady decline ever since. So now for 5 consecutive months, we've seen the number of sales across the Fraser Valley decrease. When we look at the number of active listings, we can also see that that has started to decrease as well. When we compare sales to this time last year, sales are actually up just under 8%. So it's not that we're not seeing the demand and properties selling, because we are. It's just that since June of 2023, sales have been on a constant decline. We can see sales here November 2023, and when we compare it to November 2022, we can see that they're actually up if you look at the orange line there for all property types. So again, it's not that we're not seeing them, they're just happening on a declining level. And there are some factors contributing to the sale decline. First and foremost, interest rates. So those are expected to hold now. When looking at home sales on a national level, we can see that we are still under the 10-year rolling average for monthly home sales, and we haven't been above the 10-year average since January 2022. So during 2020 and 2022, we were way above the 10-year average, and it's only been until recently where we have dipped below that. A large contributing factor to that has been the rise of interest rates. Buyer affordability is obviously down as a result, therefore it has limited the number of sales that we have been seeing. The detached market has seen the biggest drop in the amount of sales. When we look at townhomes in the valley, specifically Langley, townhomes are selling very quickly. So that does tell us that people still are interested in purchasing, and they still are interested in getting into potentially a bigger property. So people that are selling their condos and moving up into townhomes are still making that jump. It's just the detached market that we have seen take a hit in more recent months. The number of active listings is also falling across the Fraser Valley. So month over month, we are down 0.7% in terms of active listings being seen on the market. So inventory is dropping slightly, and so are sales. If the Bank of Canada meets and they decide to reduce rates, I mean, we could definitely see the market change, because I, for one, am seeing a lot of buyers sitting on the sidelines waiting to see what happens with those rates, because they're not necessarily in a rush to buy, because there is a lot of fear for some people that rates could still potentially go up. However, I don't feel that that's going to be the case anymore. I think if anything, they're going to hold over the next few months, and potentially around the summertime, we could start to see a dip. What is interesting is that new listings were actually down 11.3% this past month. And I think that that's just because we're heading into the holiday season here. And there's a lot of sellers that are just not wanting to have their home on the market this time of year and would prefer to wait till the new year to list their property. When looking at the Fraser Valley as a whole, we are officially in a balanced market now, with a sales to active ratio hovering around 15% for all property types. When we look at detached homes, they are sitting at around 11%. Overall, townhomes in the Fraser Valley are at 23% sales to active ratio, so that is technically a seller's market. And what I found interesting is when we zone in right into Langley, townhomes are sitting at a sales to active ratio of 37.7%. So that is a strong seller's market. The benchmark sale prices in the Fraser Valley for all property types continued to fall for the third month in a row, and with fewer sales and more active listings coming onto the market, I expect this trend to continue for the remainder of the year. So detached homes are sitting at a benchmark of $1.5 million, townhomes are at $845,000, and condos are sitting at $545,000. The change in price for all asset class is up year over year. Detached are sitting in a balanced market, almost a buyer's market. When we look at Langley specifically, we are already in a buyer's market for a detached home. So if you are in the market for one, there are some good deals out there to be had. Townhomes, they're sitting at 24% sales to active across the Fraser Valley, and that is a seller's market. So again, those are selling quite quickly and for good prices as well. Condos are sitting at 22%, so they are again in a seller's market. Average days on market are all hovering around 30 days for all asset classes, except for townhomes that are sitting at 3 weeks. Here's a summary of sales. We can see sales have increased year over year by 7.7%, but they did fall 11.8% month over month. New listings are up year over year, but they're down quite substantially month over month. Active listings are up year over year, and they are up month over month. Average price across the Fraser Valley is up almost 3% year over year. However, it's down 0.7% month over month. And again, I feel that that will continue to be the trend, especially as we head into the new year here. We should expect more listings to hit the market. Right now, what I'm seeing out there is that it is difficult to put a deal together. Buyers are still being very cautious. A lot of them want to wait to see what happens. I think that as soon as the Bank of Canada meets and they decrease rates, there's going to be a surge of buyer demand out there because there are so many people sitting on the sidelines. Even today, when I host an open house, there are a lot of buyers that come through and visit. They're not quite ready, but there's definitely people out there thinking about it. We can see inventory is continuing to climb up, and I expect that to continue into the new year. In December, we really don't see a lot of people put their home on the market. So it's clear that we don't need interest rates to go back to what they were because there are still people buying today. It's just they need to be a bit lower from where they're at right now. Yes, sales are down month over month, but when we compare them year over year, we're still looking healthy. I hope you guys found this market update to be helpful. Again, if you hit that subscribe and like button, I would greatly appreciate it. And if you want to talk to me in more detail about anything that we went over today or any real estate questions you might be having, you can click the Calendly link in the description below and book a 30-minute call with me. I hope you guys have a great day, and I will talk to you soon.